Ladies and gentlemen, good day and welcome to Elin Electronics Limited Q1 FY25 earnings conference call, hosted by JM Financials. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bhavani Shankar Kumawa from JM Financials. Thank you, and over to you, sir.
Yeah, thank you so much. Good evening, everyone. On behalf of JM Financial Institutional Securities, I welcome you all to Elin Electronics Q1 FY25 earnings conference call. Today, we have with us management represented by Mr. Kamal Sethia, Managing Director, Mr. Sanjeev Sethia, Whole-Time Director, Mr. Praveen Tandon, Chief Executive Officer, and Mr. Akash Sethia, Head of Strategy. Without taking much of your time, I would now like to hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you very much, Mr. Bhavani Shankar. Good evening, ladies and gentlemen. A warm welcome to Elin Electronics Limited's Q1 FY25 earnings conference call. This is Sanjeev Sethia, Whole-Time Director at Elin. And we also have on call today our Managing Director, Mr. Kamal Sethia, Mr. Akash Sethia, who looks at strategy, and our CEO, Mr. Praveen Tandon. Thank you very much for joining our call for the Q1 year ended March 25. Coming to our overall performance for the quarter, consolidated revenues for the quarter was rupees 2,936 million against rupees 2,538 million in the same period last year, up by 15.6% on a year-on-year basis. On a quarter-on-quarter basis, it was up from INR 2,778 million by 5.6%. Gross margins have come in at 24.4% for the quarter, as opposed to 24.3% in the same period last quarter. Consolidated EBITDA for the quarter was rupees 133 million against rupees 98 million in the same period last year. EBITDA has been impacted by a sharp increase in price of copper and aluminum in January 2024. Depending on the customer contracts, this will be recovered in the coming month or quarter. We also had a higher employee cost on account of annual wage revisions and some senior hires which we have made during the quarter. Consolidated PAT for the quarter was rupees 59 million against rupees 38 million in the same period last year. Our liquidity position remains strong with net cash and equivalent of INR 823 million as at June 24. Our capex in Q1 FY25 was rupees 35 million. This is largely on account of additions of tools and molds which are necessary for new product addition and which will contribute to growth in the coming years. Our working capital cycle as of June 24 is net 64 days against 68 days last year. Now, I would like to share with you the performance in each of our businesses. Please refer to slide 5 of the presentation. In lighting, fans and switches segment, the revenue for the quarter was INR 894 million against INR 832 million in the same quarter last year. This was primarily driven by an increase in revenue from LED lighting by rupees 38 million and fans by rupees 22 million. LED lighting, exclusive of flashlights, continues to face price erosions. Volumes, though, have been steady. On the matter of exclusivity with Signify, we are in discussions with potential customers, and we expect to add non-Signify lighting customers within FY25 itself. In terms of new segments in lighting, we are seeing that there's a strong trend in professional lighting of shifting to linear lighting. This is a segment which we intend to get into in the coming quarter. Regarding our fan business, we've seen revenues from our TPW fan business ramping up well. We also have an addition of a major customer where we expect to kick off production by October of this year, which will further ramp up our fan business. We have also launched 5 new categories of ceiling fans, where we expect the revenues to start contributing from October, November of this year. Hence, our overall fan business looks pretty promising. We will also be starting export of a category of fresh air fans to US market. We expect the production in this category to start from November this year. So our overall fan business going forward looks pretty promising. Please refer to slide 6 of the presentation. In the small appliance segment, revenues increased from rupees 527 million last quarter to rupees 636 million this quarter. This was driven by an increase in both kitchen and home care revenues by rupees 59 million and in personal care by rupees 52 million. Barring seasonality, we expect strong growth in small appliances over the course of next several quarters. Launch of OFR heaters in Q1 FY25, trimmers BT 1000 in Q2 FY25, and OTG and kettle in Q4 FY25 are some of the new products which we hope to hit the market with. Expect meaningful contributions to revenue from these 4 categories in FY26. We have also won mandate in irons from a large domestic OEM. Working on gaining new customers in MG and personal care also. Please refer to slide 7 of the presentation. In the FHP motor segment, revenues were up from rupees 541 million to rupees 656 million, primarily driven by increase in revenues from motor of consumer durables by INR 56 million and from sale of fan motors by INR 44 million. We expect strong growth for the remainder of the year on the back of scaling up of our ACU ODU motor in H2 of the year. With our entry in the air conditioning market segment, we are also looking to foray into the BLDC, IDU and ODU category, which has a fairly large market potential. Status of new products in pipeline is shared on slide 10 of the presentation. Overall, Q1 FY25 has been mixed for us. While the macro situation for consumer durables, FMEG, has shown green shoots of revival, we need to improve cost controls and strengthen our processes to ensure operating leverage plays out for us. Over the past few months, we have also made new senior hires in key positions which will further drive our business growth. For FY25, I would like to share our guidance. Revenues at around 1165 to 1200 crores. Working capital days to come down from 67 days in March 24 to 40 days in March 25. Note that this is without any change in commercial terms. On the back of improved demand, CapEx outlook for the year is INR 35 to 40 crores. Note that this does not include any CapEx on our Bhiwadi plot. As always, we remain committed to drive value for our customers and shareholders alike. With this, we conclude our opening remarks. We can now open the floor for any question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, we have our first question from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes, sir, you are.
Thank you. Thank you so much, sir. Sir, just wanted to understand what clientele do we cater to and what are the products that we have launched in Q4 FY24 and Q1, precisely in FY24. What would be the revenue that will be generating from these new product launches?
Hi. So just in terms of our clientele, our business is primarily B2B. So our clientele is all the leading OEMs such as Signify, Bajaj, Versuni, Philips, Havells, and so on and so forth. Just in terms of your query on the new product launches, can you just repeat? It wasn't very clear.
Okay. So in the previous presentation, we have already mentioned that we have launched a lot of products, that is BLDC, TPW fans, and all the products that were launched in FY24. What is the revenue meaningful contribution that we expect in FY25, as this might start yielding results in this year, I assume?
Sure. So I'll just go one by one and to your queries. So TPW fans specifically, if I look at, we are currently on track for the full fiscal to do a volume of anywhere between 25,000 TPW fans on the lower side per month, on the higher side 35,000. This will see a meaningful increase from November, December of this year, where we are adding another top 5 OEMs. So from November, December, these numbers should go up to 40,000 on the lower side, maybe 55,000 per month on the higher side. This is approximately at a price point of 1,100 rupees per unit. Hope that clarifies your question.
Yes. So indeed, it does for TPW, but I just wanted to confirm that, we have launched a lot of products in FY24. So, not just an individual, but as a whole, what can we expect from this product launches?
So, look, the point is that we have a lot of product launches. Some of them are new product categories itself. Some of them are new products within the existing category. So, for example, when we launch a different model under a TPW category or a different model under an iron category, do you want to consider that also as new product launches? That's what I'm just saying. If you can just give me your specific query, I can keep answering, because otherwise it just might get confusing for you.
Okay. All right. So I'll get that question offline. That's not a concern. We'll focus on the other question. My other question was, in the last call, you did mention about, you have updated your depreciation policy from single shift to double shift. So, can you tell me what's the rationale behind it, and are we running at that optimum capacity, or how is it?
So the rationale behind updating our depreciation policy was to actually bring it in line with the market. We were earlier depreciating, as an instance, our molds over a useful life for 15 years. But when we compared it to the market benchmark was 10 years. So therefore, if you see our depreciation, there was a one-time, a larger impact in Q4 last year, where the number for the quarter was 7.5 crores. That number is now, for this quarter and for the subsequent quarters, it's going to be more or less stable in the range of 5.5 to 6 crores per quarter, right? So that's in terms of depreciation. Just in terms of capacity utilization, it varies across categories. So just in terms of lighting, our capacity utilization has been steady. It's been around the 72 to 75% mark, without getting into utilizations of different subcategories. But for instance, for various categories of appliances, we are still running below optimal utilization. Depending on the various categories, it varies between a range of 45% on the lower side to 65%. Hope that answers your query.
Yes. And one last question on this, sir. What would be the EBITDA guidance for this year? I saw your guidance for EBITDA margins for around 6% for this year. So are we on track to achieve that?
Look, we are in the midst of, doing a full exercise in terms of transforming, the way our company and processes run. Our hope was, to avoid giving a specific guidance, but if you would like, we can work with an EBITDA range of between 5.1 to 5.7% for the year. This is also please do view this in the context of a lot of changes happening this year. We are making a lot of senior level hires this year. So that also has an immediate impact on cost, whereas, the benefit typically plays out over the next few quarters.
All right. Got it. And Mr. Praveen Tandon's, we have brought him on the board. So how's things going on, and what's his view on this?
He is also on the call. Praveenji, you can maybe take this question.
Hi, good afternoon. Thank you. This is Praveen. Yeah. I've been here for last 3 months, around 3 months as CEO, and a lot of transformations. We are understanding how the needs of different customers and the product range where we have to play. And currently we are working to increase our operational efficiencies and our development execution timelines to meet the customer requirements for the new products. As we are launching a lot of new products and many customers are getting in. So we are currently working for transforming the experience and giving them the faster execution so that they are able to launch the products on time.
Got it. Okay. Sir, I'll get back into it. There are many participants are waiting for me. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Sahil Doshi from Thinkwise. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just want to understand on the lighting side, we've seen some recovery. So could you quantify what is the volume growth and also illustrate what is the price erosion we are seeing yet?
In terms of price erosion, say for the last quarter, we are seeing roughly about 3 to 4% price erosion. And growth, we experienced some good growth in March and April. So the numbers I think I've already shared in terms of the last quarter was around 22 million if I'm not mistaken. Sorry, 38 million in terms of lighting as compared to the quarter.
Okay. And
Does that answer your question or you need a clarification?
yeah, just wanted more clarity in terms of the volume growth, and because I don't think the corresponding quarter number is there. And second, in terms of the outlook here, in terms of the momentum there, do we expect this momentum to continue at least with the same client for the rest of the year?
Sure. See, look, in terms of volume growth, while, there are our lighting business encompasses a variety of subcategories. So, we do battens, we do a range of downlights, we do some solar street lights, we do, a whole host of professional lighting. So I'm just giving you a consolidated kind of volume growth for the entire category. That came in at approximately 6.5% on a YOY basis. And then, there was some amount of pricing erosion. So net in rupee terms, we saw lighting grow by 38 million rupees. This was the net impact. Now, just coming to your separate query on we see the outlook for the year just in terms of lighting.
So in terms of outlook for us, I think the main revenue growth in lighting, of course, is going to come by the addition of new customers, which we have explained in the call that we expect to add some new non-Signify lighting customers. So maybe overall lighting is still, because of the price erosion, I think overall maybe the industry is not growing very fast. But what we do expect is based on our quality of products and all that, we should be able to add customers and eat away, share of business of other suppliers. That's how we look at lighting business going forward. And we are fairly confident that we should be able to add, volume by adding new customers.
Sure, that's helpful. Just on the other categories, one on the fan side, the growth in the TPW is very encouraging. On the BLDC side, I think it's something where we don't really yet have a major client. Just wanted to check, is there any positive momentum there?
Yes. So TPW, of course, is pretty encouraging for us also. And like I mentioned in the call that we are adding one more top 5 customer where we expect production to start from October of this month. So definitely it's a very encouraging business for us. As far as BLDC ceiling fans is concerned, we've already started with one top 5 customers where we expect the volume to ramp up in the coming season. But at the same time, if you followed my call, we've introduced 5 new categories of ceiling fan, and out of which 2 are BLDC ceiling fans. We were a little late in launching this project, so we did not get the full benefit of it in the last season, but the response has been fairly encouraging. And we expect that going forward from October, November of this month, we will have the full season where, the production should ramp up, and I see these numbers should also go up. And we are also actively engaging with other customers. We've developed some more fans which we will be in a position to offer to other customers. So we already have 2 established players for the BLDC categories. We've developed some more BLDC fans which we can offer to other than these 2 customers. So I think overall, the fan business, like I said in my call, it looks pretty promising for us, and we should expect healthy growth in this category.
Understood. And
let me also add, I think we are also very well positioned as one of the few companies, let's say in the fan business right now, which has a fairly large scale of operations, not only in electronics, but electronics, mechanical, and motors. So we feel that we are a little uniquely placed in the sense that we can do all these categories under one roof. Otherwise, most of the competition, they end up, buying the electronics or the control from third party, whereas we have our own in-house development and manufacturing facility. So I think in BLDC, it will give us a head up as we become, larger player in the fan category. We entered fan business somewhere around 3.5, 4 years back, so not very old and established in this business right now. But the future definitely looks promising.
Thank you. So that answer was very, very helpful. Just on the appliances side, I think we were exploring certain large opportunity in trimmers, and more so, just wanted to check, is there anything materializing there from an export perspective also? And we saw a dip in this quarter, but are we seeing, the personal care segment outlook to improve in the second half?
Yes, Sahil. So specifically in terms of trimmers, there are, the way I would explain it is there are 2 categories. One is, BT 1000 series, which is the entry level model, which, we've been doing since, several quarters now. So volumes there have now kind of stabilized. We are yet, however, to launch the BT 3000 series, which is a step up from the BT 1000 series. We expect, commercial launch of that in the current quarter, so Q2, where we are sitting currently, in the month of September. So probably full impact of that should be seen over the course of, Q3 and Q4, as it typically takes, quarter or 2 to ramp up. Steady state, we expect volumes of anywhere between 1 to 1.5 lakh pieces per month. In the BT 3000 series. This is at a price point of roughly 375 to 400 rupees per unit.
Understood. And just the last question, Akash, I think, we in the past you've illustrated that the ambition is to take our employee cost to around 10% of sales, right? And we were expecting that we have enough, ability of rationalizing cost in our entire system. So where do you see this materializing, by when, at what level of sales, and how do we look at employee cost in absolute terms for the FY25 and 26?
So, very fair question, Sahil. The way we are thinking about this is, employee cost is kind of split into 2, right, broadly. So there is, the staff, the white-collared people, and then there are the labor, where we have the blue-collar staff. So, in terms of labor, the way to think about it is, we are working on various, low-cost automation projects, where we can, introduce automation and drive efficiency. Now, these are small projects spread across, a variety of applications, right? So, for implementing these series of projects, typically we expect, that it's going to take us at least 6 months' time to implement it across the organization, because there are various plants, and within within each plant, there are different sets of LCAs or low-cost automations that we are looking at, right? So the full benefit in terms of labor reduction, you will only see probably in terms of FY26 numbers. Just in terms of FY25, I think the number that you should work with is probably, just in terms of employee cost as a percentage of revenue is probably in the range of 13.5 to 14%. It's still high, in our view. But also do keep in mind that this is also a year where we are, building out our team in terms of, we've gotten in a CEO and we've built a fully professional, high quality team under him. So there is also that impact of cost that has come in. For FY26, we expect this number to be in the 12.5% to revenue kind of range.
Perfect. Appreciate the responses. Thank you so much and best wishes.
Thank you so much. Before we take on the next question, I would like to remind all the participants you may press star and 1 to ask questions. You may press star and 1 to ask questions. The next question is from the line of Vipra Srivastava from InCred Research. Please go ahead.
Hello. Hi, I'm audible, right?
Yes, sir.
Just wanted to understand that what kind of growth are you anticipating for this year? I mean, you were supposed to give a guidance, right? Did I miss it? Or have you given some?
So we mentioned that the revenue that we are looking at is in the range of 1165 to 1200 crores for the year.
Okay, thank you. Thanks a lot. And secondly, on the demand side, so I mean, just want to understand that in India, as far as the premium durables are concerned, like even if you take let's say an AC, I mean, AC companies are doing quite well. Whereas on the other hand, small appliances like mixer grinders and iron and all this lighting are not doing that well. So what's the ground research telling? Why is that dichotomy here? Why is that thing that premium is growing but this is not? Is it that in some time it will grow, or what do you see in this space? So yeah.
So, look, your question is absolutely correct. Now, the way I would like to answer it is, in probably, 2 points. One is, ACs, I mean, the kind of weather that, we've experienced over the last summer, especially in North India, has been like, extremely, hot kind of weather. Therefore AC companies have done really well. Now, I would put this down not only to just premium consumption doing well, but also in terms of a necessity, which has been caused by weather conditions, right? But I fully agree with you on your point in terms of, there being still some amount of weakness in terms of the small domestic appliances space. We mentioned that, our capacity utilization also, especially in the domestic appliances categories, continues to remain lesser than optimal. We are working to expand, our utilization levels by connecting with newer customers, by launching newer models of products. And our understanding is that, where we are in our conversations with customers, we should see pretty healthy growth over the course of the next quarters. In fact, in our guidance, the maximum kind of growth that we are seeing is also in the domestic appliances space. So we do expect that maybe by Q4 of this year, utilization levels should be able to improve substantially than where it is today.
Okay. Last question on the BLDC fans part. So, I mean, just want to understand from a technical point of view, I mean, the slowdown in the ramp up for BLDC fans. So is there a technical barrier to entry there, which takes time to evolve, or is it that we just got late and we didn't require new clients, or is there some technical expertise required which Elin didn't have and that's why we got late? So just want to understand the reason behind it.
Voice was not the clearest, but the last point was there a question in terms of the technical expertise or?
Yes. I want to understand it in BLDC fans, is there technical expertise required, which is a barrier to entry, or it's just that, what's your view on that? Why did we didn't ramp up as quickly in the BLDC fan? So, yeah.
Ladies and
Hello.
gentlemen, we have the management line disconnected. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently waiting. We have the management back with us. Over to you, sir.
Yeah, hi. Sorry, the line got disconnected. So, there is no technical, glitch or shortcoming.